Do you want to strike it rich with Bitcoin? Preserve your wealth as digital gold? Or escape the fear of losing everything in a crash? The answer is simple. Understand the true nature of Bitcoin. Separate technology from speculation. Why does this matter? This slide explains everything. Bitcoin's foundational technology, blockchain. This is revolutionary. No central bank. No banks. Transaction records distributed across multiple computers. Extremely resistant to tampering. Highly transparent. This is the democratization of the financial system. But let's face reality. While the protocol eliminates banks, most people use exchanges and custody services. Intermediary risks exist there. And here's the critical truth. Revolutionary technology and stable investment are completely different things. Superior technology doesn't automatically make a superior investment. This is the pattern the data has shown repeatedly over the past 15 years. Not a hypothesis. The reality the market has demonstrated again and again. And this is understandable. Learn how blockchain works. Look at the price volatility patterns. This lets you judge with data, not emotion. Today I'll show you that honest truth. Bitcoin is called digital gold. What's the reason? Supply cap, 21 million coins. This cap is designed into the protocol, and changing it requires broad consensus. In practice, it's extremely difficult to change. Like gold, scarcity supports value. Central banks can't arbitrarily increase it. Resistant to inflation. Theoretically perfect. But what's the reality? Look at the historical data. Bitcoin can experience massive drops or gains of hundreds of percent in any 12-month period. Meanwhile, gold's annual volatility is around 15%. Bitcoin fluctuates several times more violently. Gold has functioned as a store of value for thousands of years. Bitcoin has only a 15-year history. Too volatile to call it digital gold. Its stability as a store of value isn't proven yet. Bitcoin is called the future of currency. So can you actually use it for daily payments? Look at the numbers. Bitcoin's L1 is designed with effective throughput limited to a few transactions per second. It varies with congestion and transaction size. Meanwhile, Visa can handle approximately 65,000 transactions per second at peak. Bitcoin processes less than 0.01% of Visa's capacity. What does this mean? People around the world buy coffee at Starbucks. They shop on Amazon. Bitcoin L1 cannot process that transaction volume. Additionally, during network congestion, transaction fees can spike. This can disadvantage small payments. On the other hand, fees also represent network maintenance costs, supporting security. Is there a solution? A technology called Lightning Network is being developed. Adoption is progressing, but it hasn't become mainstream for daily payments. Technology development is advancing, but a future where everyone uses it at convenience stores will take time. So what's Bitcoin's true nature? An asset with extreme volatility. Look at the data. November 2021, Bitcoin hit approximately $69,000. 1 year later, November 2022, approximately $16,000. A 77% decline. If you invested $100,000 at the peak, you'd have $23,000. But the story doesn't end there. In March 2024, it surpassed approximately $73,000, reaching a new all-time high. During that process, it experienced multiple crashes. And depending on the phase, daily fluctuations of plus or minus 20% can occur. You wake up, your wealth is up 20%, or down 20%. Stock market volatility typically runs 10 to 20% annualized in many phases. Bitcoin shows volatility far exceeding that. What does this mean? Volatility is Bitcoin's essence. But recently, Wall Street giants and public companies have started holding Bitcoin. The market is transforming from individual speculation to institutional asset. Bitcoin carries regulatory risk. What happened? In 2021, the Chinese government completely banned Bitcoin mining and trading. At that moment, the price crashed. But the story doesn't end there. In January 2024, the US SEC approved Bitcoin spot ETFs. This legitimized institutional investor participation. Its status as an investment asset is solidifying. Meanwhile, regulatory oversight and tax policy debates continue across crypto, so policy risk hasn't disappeared. In the EU, moves like MiCA are advancing comprehensive regulatory frameworks. Regulation isn't just prohibition. It can work positively for markets as framework clarification. Stocks and bonds also carry regulatory risk, but crypto assets face faster-changing legal positioning and oversight frameworks, with relatively greater uncertainty. Stocks also have policy and regulatory risks. Meanwhile, crypto activities like trading, mining, and payments are more easily subject to prohibition or restriction. Regulatory clarity changes entry barriers and credibility. So how much should you invest in Bitcoin? The answer is clear: 1 to 5% of total assets. This is the realistic ceiling. Reports from major financial institutions like Fidelity examine 1 to 5% portfolio allocations from a risk-reward perspective. Why? Bitcoin is an experimental asset, not the core of your portfolio. What are your core assets? Stocks, bonds, real estate. These are the foundation. Position Bitcoin as a satellite investment, a small bet. If it rises, it boosts your overall portfolio return. But if it goes to zero, your life doesn't change. Betting everything is dangerous. If you have $100,000 in assets, invest $1,000 to $5,000. Stay within this range. This is the mathematically rational allocation. In 2024, U.S. Bitcoin spot ETF approval expanded pathways to hold it from brokerage accounts without self-custody. While more convenient, it also raised questions about fees, custody concentration, and price volatility from fund flows. Now, the conclusion. Is Bitcoin a revolution or speculation? The answer? Both. Blockchain as technology is revolutionary. It has the potential to fundamentally transform the financial system. No centralization. Transparency. Extremely high resistance to tampering. This could become the financial infrastructure of the future. But as an investment, extremely high risk. Massive annual fluctuations. Severe daily volatility possible. Regulatory uncertainty. Technical constraints as a payment method and fee issues. This is reality. Believing in revolutionary potential and betting everything are completely different. What is rational investment judgment? Look at the data. Eliminate emotion. Manage risk. Keep Bitcoin at 1 to 5%. This is the only way to protect your wealth while participating in revolutionary potential. Since ETF approval, Bitcoin's price formation factors are no longer just individual trader sentiment, but strongly influenced by macroeconomic conditions and institutional portfolio adjustments. Now, let's organize today's key points. Here's today's summary. First, separate technology from investment. Blockchain is revolutionary technology, but superior technology and stable investment are separate things. Bitcoin's price volatility is several times that of gold. In March 2024, it reached a new all-time high, but experienced multiple crashes in the process. Still too volatile to call it digital gold. Second, understand both utility and institutionalization. L1 processing speed is less than 0.01% of Visa's peak capacity. Fees spike during congestion. Meanwhile, 2024 U.S. spot ETF approval and EU MiCA development show regulation functions not just as prohibition, but as framework clarification. Many challenges remain before mainstream adoption as daily currency. Third, clarify your portfolio strategy. Bitcoin, 1 to 5% of total assets. Keep it to amounts that won't affect your life if they go to zero. Since ETF approval, institutional participation has accelerated, and the market is transforming from individual speculation to institutional asset. This is the only way to participate in revolutionary potential while protecting your wealth. How will you position Bitcoin? Bet everything as a core asset, or participate small as a satellite investment? Share your strategy in the comments. Your asset allocation plan, your questions, your experience, everything becomes wisdom for this community. Thanks for investing your time with me today. This channel illuminates the path to financial freedom through numbers and strategy, from new asset classes like Bitcoin to traditional stocks and bonds. If you want to judge with data, not emotion, hit subscribe. Turn on notifications. Until next time, keep building.